The recent fall economic update in Canada has sparked a lot of online discussions, and today I want to provide a little breakdown of what's happening with the new Canadian Mortgage Charter. In this video, we'll be focusing on the relief measures that are potentially on the horizon for mortgage holders and renters in Canada. I'll be sharing my insights onto how these changes might impact the long-term scenario, but you'll have to stick around to find out. Let's go. First off, if you're new here, welcome to the channel. My name is Morgan Little. I appreciate you joining me. If you learned something new or enjoy the video, consider giving it a thumbs up. And if you haven't already, please subscribe. Of course, if you're in Toronto and seeking expert real estate advice, book a call using the link in the description below, and I look forward to chatting. Now, let's dive into the topic of the recent economic update brought to us by Chrystia Freeland, which covered various aspects, including airline tickets and grocery prices and a bunch of other things. But in this video, we're going to focus solely on the housing sector. Some people may welcome these changes, while others, hoping for a different market direction to enter, might not be thrilled. At a glance, the federal government aims to help renters by curbing rent price increases and assist homeowners on the verge of mortgage payment challenges due to the rising interest rates. It looks a bit like they're going to be aiding existing property owners in distress while not necessarily making it easy for current renters to actually enter the market as homeowners. Does this make sense? You let me know in the comments. Now, let's talk about the Canadian Mortgage Charter. What does it actually mean? Essentially, this charter is designed to assist individuals facing financial difficulties due to interest rate changes. Now, let's break down the 6 key points. Number 1, temporary exemptions of amortization periods for mortgage holders at risk. We're not clear on exactly what qualifies as at risk, but hopefully there'll be more clarity around that coming. Number 2, waiving fees and costs associated with relief measures. Both 1 and 2 are a bit vague, but this next one I think will have a real impact. Number 3, and that is not requiring insured mortgage holders to requalify under the insured minimum qualifying rate when switching lenders at mortgage renewal. Meaning that you will not have to be stress test again if you decide to change lenders. That I think can actually be beneficial to people. Number 4, mandating banks or lenders to contact homeowners 4 to 6 months in advance of mortgage renewals to discuss their options. You'd think this would already be something they would do. Number 5, granting homeowners at risk the ability to make lump sum payments to prevent negative amortization or sell their principal residence without prepayment penalties. Meaning that if you're selling your home before your mortgage term is up, you would normally have to pay a penalty for breaking that mortgage. With this, you won't have to pay that penalty fee if you can show that you're at risk. Also, you'll be able to make lump sum payments if you're in negative amortization and if you can actually afford to pay that lump sum payment, of course, which most probably wouldn't, so I'm not really sure about this one. And number 6, avoiding charging interest on interest in the event of mortgage relief measures, leading to temporary negative amortization for homeowners at risk. So no charging interest on interest, I think that's a good one. Now, remember, this is not actual law, but really just recommendations from the government at this point, so we'll have to see what the big banks really have to say about this. All of these measures aim to provide support for those who might be struggling, but there are differing opinions on whether this is the right approach. Some argue that it's just a form of government intervention that helps those who may have made imprudent financial decisions. Others believe it's necessary to stabilize the market. I can see both sides of the conversation, but I'd really like to hear what you think. Please let me know in the comments. Now, what if you're a renter facing increasing rental prices and uncertainty in the housing market? Well, there is potential rental relief on the horizon, but it's not happening immediately. Here's what's planned. A commitment of $15 billion in new loan funding starting in 2025-26 for the apartment construction loan program, supporting over 30,000 new homes. Continuation of the rental construction financing initiative with the goal of building 100,000 homes by 2031. An additional $1 billion over 3 years starting in 25-26 for the Affordable Housing Fund, benefiting more than 7,000 nonprofit co-ops and public housing by 2028. It's important to note that the government approach to creating more affordable housing typically leans towards rental properties, but we all know that they're not great at keeping up with the demand of houses and buildings being built. However, the dream of homeownership remains strong for Canadians. Even with increased housing construction, immigration trends suggest continued demand for property ownership. And to conclude, there are various factors at play in the Canadian housing market, and these proposed changes are just one piece of the puzzle. Your thoughts and opinions on these developments are highly valuable, so I look forward to reading them. And if there's ever anything I can do to help in your journey, don't hesitate to book a call by using the link below. Thank you for watching. Stay well and stay hungry.